Jerome Powell. I don't know if you guys have come across this dude. He's a very famous dude in the internet, especially for those people who are engaging themselves in trading. I think you have most of you have come across this old man here. I think you can see this picture. You guys can see my. So guys, yesterday we were looking on the fundamental part of trading. We discussed different news. We discussed about NFP. We discussed about CPI. And what you're going to catch from today is we are going to finish up on that fundamental part and how it's going to impact the markets. Then we are going on the today's part. So Jeff, I don't know if he shared with me today's outline. I'm not sure, but I think you should share with me today's session on the outline of what you're going to deal with today. But generally, I'm going to finish up first on the yesterday's part where we left out. Then I'm going to continue from there. So yesterday we were discussing on the news, and I said about NFP, CPI, and we ended up on the part of FOMC. Okay, FOMC. It is. Let me write it here so that it can be clear for anybody to see. Okay. This is called. First of all, you should know what is the FOMC. This is called Federal Reserve this first of all, FOMC, it's a committee. This is not it's not a single person, it's not a single event. This is a meeting. Anytime you see FOMC, it means this is a Federal Open Market Committee. It's a group of people who sit together and their main work is to regulate and to look over the interest rates in the American economy. So these rates, either in this period of time, they should increase the rates or they should decrease the rates. So from those analysis and coming from that end, what they decide to do is what make this committee functioning. And they held meetings and decisions every 3 months. Every 3 months, they have one big meeting, 3 months, one big meeting, 3 months, one big meeting. So on those meetings, they make major decisions on interest rate in America. To which these interest rates decisions, once once they cut rates, it means it has impact on the USD. Also, once they increase rates, it has impacts on USD. Now, this FOMC committee, they have a chairman. His name is Jerome Powell. I don't know if you guys have come across this dude. He's a very famous dude in the internet, especially for those people who are engaging themselves in trading. I think you have most of you have come across this old man here. I think you can see this picture. You guys can see my screen right there.
Yes, we can see your screen.
Okay. I was just trying to confirm. So I believe you guys have come across this guy on social media. This is the chairman of this FOMC committee, this Federal Open Market Committee. And this committee, as I said, their work is to regulate on the interest rates of the US economy. So this old man is the chairman. Every time you see this man speaking, it means it is after the meeting and they have made some decisions on interest rates. So this old man's work is to announce on those decisions, what they have come to decide on the committee, and if they have decided to cut rates or increase rates, and what are the impacts that are expected to see on the dollar, and what initiations that the committee has taken to make sure the economy is moving stably. So once you see this old man, it means the meeting has already been done, and what he does is just giving out the announcements of what they discussed in the meetings. So as this chairman, since I have started Forex, he has been the chairman of this committee. I don't know when he's this guy getting. I don't know if he's elected or what. I've never honestly looked into that. I'm not sure. So that's the work of this guy. So this chairman, what he does is to make sure every decision made in this FOMC committee are aiming at regulating the monetary economy in the country. They have to manage so that they cannot have high impact or bad impact on the dollar. Also, they must not have a big positive impact on the dollar. They must the impact of this FOMC data releases, they must be good and must be in the aim of regulating the economy. So this Federal Reserve Board and its chairman Powell, that's their work. And once every time you see there's a new FOMC news, it means they are giving out their report. There's FOMC meetings, there's FOMC FOMC meeting minutes, and there's FOMC rate decisions, and the FOMC press conference. Those are all news that are aiming at impacting or giving out the outcomes of the US economy in the monetary policy. Okay, coming back to our main point now. What are the impacts of this news on the economy? FOMC, it's the right decision. So I don't know if you guys have studied in your syllabus there in your country, but we know that once there is rate cuts, once the interest rates are reduced, it is a positive indication to the economy. Why? It influences more people to take loans and investing their money back in production. So that stimulates economic growth. But at the same time, when the rates are increased, so it means a low number of people are taking loans from the bank and expecting to do some economic developments, because 90% of people who are those people are the investors. Most of investors who are opening business and they are the producers. They are all at large depending on loans. So once the interest rates are increasing, it means it hinds them from taking more loans. That's not a good sign to the dollar and or to the economy in America. So what they do, they aim at always cutting rates so that they can influence more people to take loans and invest money into economic activities, to which they might bring more production and that could lead to growth in the economy, because as you know, once they invest more in economic activities, it means more people will get jobs, more people will produce more exportation and everything. At the end of the day, generally it leads to the economic growth. So that's about FOMC. So always what we're expecting, that once the rates are cut, a positive impact on the dollar. Once the rates are increased, a negative sign or negative impact to the dollar. So let me look what if I don't Sir Jeffers will send me today's regards what we are going according to his timetable. What was he focusing on today? What, because I didn't come across it. I was very, very busy, guys, with this week. So I think I'll need to see what is today's main focus, so that I can know on how to get through it. Okay, looking on where we left yesterday. Let me see the last parts of what we left yesterday, and I'll carry on from there. Okay. What I can see here is we look at on the analysis of the live market news. Let's look this week what we are having. When I look on the calendar, tomorrow is Thursday, and the day after tomorrow it's Friday. Tomorrow, Thursday, we have these are the major news that might bring impact on these currencies. We have Bank of England monetary policy report. It's like FOMC of England. So this is the FOMC of UK. They don't have the FOMC committee, but they have Bank of England monetary policy report. So this is also the rate decisions or impacts during this time on the any pair with GBP. We're expecting to see some volatility during tomorrow evening. The other news tomorrow we have is unemployment claims. We are looking into the scope of employment in USA. As I said yesterday, when you see unemployment increasing, it's a negative sign to the dollar. When you see unemployment reducing, it means it's a good sign. But for what the economist has predicted, they have predicted tomorrow to see an increase in unemployment claims. So to which what they predict here is to see a negative impact on the dollar. So what they're predicting is that the dollar might become weak tomorrow, because once unemployment increases, it means it's a negative sign. So tomorrow, that's what the economists are predicting, or they are expecting to see on the market. And once we know what the economists are looking for, it means tomorrow at that time now we're going to look on what do we see on the dollar, or what do we see compared to what the economists are saying. As I said, we look on fundamental, we look on the technical analysis, then later on we compare it to the fundamental analysis on what it says. So that's the main picture we are having tomorrow. Looking on those two news, GBP interest rates, and also unemployment claims. But on Friday, this is the good one, and this is the major news I always trade every month. We have non-farm unemployment change. What you can see here, they're predicting that the employment, they reduce from 256,000 to 169,000. Okay, so this is a big negative impact on the dollar, because this employment, they are almost decreasing by 80 to 90,000 employment are, they are predicting that the employments are going to fall down from 256K to 169K. It's almost a loss of 80 to 90,000 jobs have been lost over the month of January. So these are predictions that what the economists are expecting to see to Friday on the NFP. So this is the news that we must keep our eyes on. Okay, this is the news that we must keep our eyes on. If it comes out as they predicted, like employment they reduce, it means we are going to also see a big sell on USD. From what I'm seeing here, and generally, I at a high rate, I see like we're going to see a loss of strength on the dollar over these few days, because Trump is doing some reformation on the economy. So as we know, for you to construct something new, you must first destroy what was there, or you must reduce it to a certain point where you can construct yours as the way you want. So I think that's what Trump is doing right now. He's cutting out the strength of the dollar. Maybe they're expecting the dollar to keep on selling to this point here. Once it reaches this point here, is when you're going to regard again dollar going up. So according to what I anticipate on the Friday's NFP is to see a good sell on the dollar, because economists are predicting that the employment are going to reduce from 250 something thousand to 169,000. Okay, so as that's the picture we are having, it means we will keep all our eyes focused on Friday. So, and I always advise people to reduce the rate of how they trade during NFP week or CPI week. Most of the time, the pairs will make very little moves just to wait for the major moves during the NFP. So that's what I'm seeing on the Friday NFP. And if I get a chance, I'll contact the Osagefu and we'll be live analyzing the markets during NFP on Friday. So that's what I can see on these pairs today. Now, coming back on what we're supposed to be doing today, let me see. Send it to me. Oh my God. I don't know, guys. It's just a gift you online today.
Yeah, brother, I'm here.
Can you share with me the outline of today?
The outline of today. So actually today is about fusing fundamentals and technicals. It's basically about building strategies.
Okay. Now
Yeah,
combining all these things together, right?
exactly.
Okay. I get your point. Okay. Now, in coming to combine these things together, and now for you to get started on actually trading, as I explained in the previous sessions, that you must focus on knowing the trend of the market, the first thing. Even if you are trading fundamental or technical, there is no a day that the market will go against the trend which is dominant. When I say the trend is dominant, I have explained in the previous sessions almost every day, because it's a very crucial thing to consider. That you must know the trend of the looking or let me go on JPY, and I'll get a picture here. You must the key levels where the market has reached. If you see here, this line I marked here. It's a very long time line, a very long time I've marked this region. This is a key level. Whatever the market reached this point, we experience a push to the down. When the market reach at this point, we experience a push to the down. So this is already a key level that we must keep our eyes on. So regarding on this key level, it means the market is forced to go down no matter what. So always just consider your trend, after considering your trend, know the key levels. After you know your key, it will be easy for you to know last session I said. Well, you don't trade. It's very advisable. Don't trade. Stay away stay from the markets and wait for the markets to form a good trend. But also, what you can see as that has happened so it's very hard to know when it's going to have a retracement and when it's going to sell. So I also recommend, for example, person who is trading gold. Right now, you can, if you have already have some trades holding this buy, it's okay, it's a good one. But if you have not taken any trade on gold, it's advised for you to wait first for you to see any structure formed inside here. Because what we can consider right now is the structure of these small time frames, because we have nothing to consider on the above. Okay, we have nothing to consider on the higher time frames or here, because back here the chart is on its all-time high. There's nothing we can consider at this side. So what we are going to do is to consider what we see on that particular small time frame. Always the market is doing something in a smaller time frame. So for example, if I want to trade gold, here you can see it's generally an uptrend. Gold is uptrending. So I don't know when will we get another downtrend, but from what I see, gold is uptrending for a long period of time. What we are having here is we are looking for an opportunity to buy, as I explained. Market is moving rapid correction, rapid and breaking structure. This is a break of structure, creating another high. After creating another high, it came back down to retest. And this low did not break previous low. And it created another new high here, breaking another structure here. So what we are looking for is an opportunity to buy. Where gold it is right now, it's a good opportunity for person to take a buy because it has come back to this zone. And this is when this move, which made a break of structure here, has begun. So from this point, we can take our buy and put our TPs at this point here, because generally gold is uptrending. So for you to trade now, currently it's a buy on gold. You can take your buy and put your take profits over this point. As I said last time, you take your buys, but your stop loss to be considered out of this zone here. So where I have this black line of mine, it is where the stop loss is recommended to be. So you can take your buy there and put your stop loss here. I mean, put your take profit here and your stop loss below here. That's how easy you can trade, just according to the trend. Make sure always you are going with the trend. As we have seen, gold is uptrending. We're just going to join this uptrend. Take our buys here, put our stop loss out of the zone here, and that's how it is. That's on gold, because gold is clear and it's in a good uptrend. Coming to other pairs with USD as a cold currency, we also go to higher time frames and we look for the trend, where the trend is going. After we have seen our trend, it's when now we are going to know what decisions are we going to make. This is what we analyzed yesterday, if you guys remember. I told you GU has entered in a very potential area for it to experience a push, because once you see here, it was an uptrend. It went up, it went down, it went up, it created this high, and this high broke this previous high. It created another new high and come to retrace. Retrace from the area where the movement which made this break of structure began. As you can see here, this is daily time frame. So this is a very big structure. This one is a big break of structure here. Where did this movement that break this structure began? It began here. This is our zone. When the market comes back to this area, we are anticipating to see a buy. That's what is happening here. There's retraced here, and then we have seen a push to the up. So what we are going to do is look for an opportunity to join on this push to the up. Okay. If you guys catch a good buy on GU, you can hold this buy until NFP. if you get an opportunity to catch a good buy here, it's a good time to hold it until NFP. Okay, because this is a very good setup that it shows where the market has been heading for you. So, what is the next break of structure you have seen? Is this one. What you're waiting for is these candles to close above this high with full body candles, not these wicks. For you to term one as a break of structure, you must see this closure of candles above the previous high with full candles, not wicks. Like a whole body of candle must close above this area. If we are looking for a break of structure, it means we have to see a closure of candle above these highs with a full body. Or you can use line chart and you can mark the high, then you can know, did this other side close above our previous highs? As you can see, regarding on the line chart, you can see there's a break of structure here. So what we're going to do is looking for a retracement, because we are buying after every retracement. Where did this move, which made this break of structure began? It is here. This is where the potential area where this move made a break of structure. So what we are going to do here, it is to mark this region here. There. Anytime this market comes back here, we take a buy to the upside. So, for example, this market comes back here before NFP, you can take your buys and hold them until it's 5-day NFP, because obviously it's going to be a very correct entry for you to hold over a long period of time. So that's how we regard these entries. After you have known this is your key level, you keep on modifying it so that you can get as smallest stop loss as possible. For what I do, I always take my entries in the middle of the zone. Just wait for the price to come back in until the mid of the zone. I'll take my buy there from that point and put my stop loss out of the zone here. Okay, so it will be a 23 pips stop loss, but I take profit of 140 pips. It's a good risk reward ratio, very good risk to reward ratio for you to risk 20 pips to aim for 140 pips. It's very, very, very worth it, and it's something you can consider on taking. So this is what I see on this GBP USD heading to tomorrow's news and Friday NFP. So once it comes back to this point, I'm going to take my buys upside. That's how I do my analysis, and that's how I take my entries most of the time. Those are the things I consider. No matter if there is news or it's just normal technical analysis, but that's all I consider and help me to make good decisions on what to do on the market. Senyo is telling me I'm making things look like so simple. No, they are really simple. That's the basic thing. All you have to consider why most people lose in trading is because their strategies. Let me tell you this naked truth. Every strategy in the world, there are times you will experience some losses. No matter how perfect the strategy is, you'll get losses. So you have to know how to manage your risk well. Make sure you win big and you lose small. I always tell people in my maybe Signal VIP channel or people who I teach, I always tell them, make sure your trading account balance is like this chart here. Like it goes down, it goes up. 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 But always in an uptrend. Like your balance should be shaking up and down, but going in an uptrend. So it means once you win a trade of $100, make sure your loss does not exceed $50. And your next win should exceed $80. Like you should be winning big, losing small. That means you'll be going up and down, but always going upside. Okay? you're always going to make profit because you are losing small and winning big. And no matter how your strategy has high chance of winning rate, but you must consider your risk very well. Risk management is everything in trading. You can be the best trader the world has ever have, but if you can't manage your risks well, then you are nothing. You're nothing. You're far away from success because we cannot trust you with money. Okay, that's how simple things are. So all you have to do is just combine the ideas you have on fundamentals and this technical analysis, combine them together and come up with what to do or the decisions to make. But also sometimes I tend to use Fibonacci retracement, and I might show you guys on how I use this tool. This Fib is for me to catch those key levels. If the market is very, very, very shaggy, I cannot see those key levels very well. What I do, I use Fib retracement. As you can see here, I was looking for a potential area where I can consider that USDGPY, it might go back up again. I was trying to mark what are the key levels that I might consider that the market might experience a push to the up. And anytime the market enters between my fib of 61.8 to 78.6 here, once the market enters inside here, I am likely to experience a push back to the up. So this is the picture I had. So this retracement I'll put from beginning of my buy to the end of it. Okay, from beginning of this uptrend to the end of it. I'm taking from this point because I'm looking for a buy. So I'll start from down. My 0 or my 100 will be here down, and my 0 will be up here. Okay, that's how we look for a potential area for you to take a buy. But if it is a sell, then I'll start from this point here, going down, looking for an area where the market will retrace and continue with a sell again. That's how we use our fib retracement tool. And that's very, 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 very simple. Okay, let me read your question. Okay, but the way you are trading, does it mean you use pending orders most of the time? No, I never use pending orders. Because I'm a full-time trader, I'm always on the markets. Why should I use pending orders? So what I do is just look at the market, like watch it nakedly, wait for it to do something, then I make decisions. Like I wait for the pair to get in my zone. Like this was a very good clear buy here. I don't know how I missed it. See here, when the market enters your zone, what I'm going to wait for example, for me to take this buy here, what I'm going to wait for is to see a change of character as I explained yesterday. Here, very simple. This is a high, this is a low created. What am I expecting to see here is this market closing above this high and retracing either to this point on this shoulder here or here where this movement began. Then I'm expecting to see a push to the up. This is how I trade. So I must see first this change of character here. Like the market must close above here, break structure, close above here, comes back to retrace either where the movement began or equal to the shoulder on the other side, like here. And we are expecting to see a buy. So once it closes, this candle pushes up and it closes above here, I'm waiting for it to come back here. And I'll put my stop loss here below the zone. So why should I using a pending order and while I have not seen a change of character? So I don't use pending orders because pending orders you will not see the market. You don't give the market a chance to do something or to make a certain structure for you to confirm it's going to change the character and to move the upside. So that's how I do. I always take market execution orders because I want to see that change of character occurring. So once it's closed above here, comes back to this shoulder, I take my buy, or here I take my buy, going to the upside. Okay, so that's it, guys. You can save this screenshot here, and you'll tell me what the market will do. If we do not close above this high here, it fails to break this structure. It means still going down, so I will not take my buys. But if it closes above, when it comes down, I take my buy because I know this is where the market is going to change. Okay. On the fib retracement, I said we look on the key levels. If we can't see clearly the key levels from the negative chart, we use those fibs to catch on those regions where we are going to experience the market buys or sells. So that's the work of a fib. Maybe I want to buy this. I want to know which point should I come and buy again. I'll take my fib. I'll start from where this movement of buy began to where it ended. There. Okay, this pushed the up, started here and ended here. So what I'm going to do is waiting for this to retrace and enter within 61.8 to 78.60. Once the market enters inside here, I'm going to wait and see a change of character as I showed on the previous example. Even if it comes back here, I'll also want to see a change of character. So anytime I see a change of character inside here, I'm taking my buys without any worries. That's how we use the fib retracement. If it is as a point of looking for an area to sell, it means you're going to do like this. You're going to sorry guys, let me look for another example. Okay, so if it is maybe me looking for an area to sell this euro card and I don't understand where the market structure, as usual, I'll start where this sell began to where it ended here. So anytime this cell retraces and enters within this range here, 78.6 to, let me mark 7 here, this range here. So once this buy retraces and enters this region, I'm waiting for a change of character. I'm taking my sales, continuing with the trend. So that's how I use this film. Just simple like that. I use to identify the key levels where the market is likely to experience a retracement. That is called Fibonacci retracement. This is a tool. It is a tool used to mark and to see the key levels or to know where the retracement of the market is going to end before continuing with the rapid move or with the trend that is dominant. So that's how we use the Fib tool. It's very easy. Just go on your trading view and you come here on Gann and Fibonacci tools. You click here, you catch this Fibonacci retracement. That's what the one I'm using. So that's how you're going to identify these trends and to catch these cells. Okay, coming to winding up. I said yesterday, if you are trading, you want to trade fundamental, you must consider your risk management very well. Fundamentals tend to be very volatile and you might lose all your capital trading news or trading during the volatile market condition. So what I advise you to do is, if you're having maybe $100 in your account and you want to risk maybe $20, transfer that $80 to maybe your wallet or withdraw it and trade only with $20 remaining, because sometimes the market or the market might not respect your stop losses and everything. It might just push and create new highs for you and you end up losing all your funds. So I recommend, if you want to trade news, make sure, because sometimes you cannot respect stop loss because very volatile. So no any broker can manage to handle that volatile of the market and close your orders exactly at the point where you put your stop loss. Sometimes you see some slippage and you close with a huge loss than that which you intended to close with during by using that stop loss. So I recommend you to just use the funds in the account that you are ready to risk during the news condition. Other than that, I withdraw other funds and put aside on the wallet or withdraw it, and you'll come back to the markets when the markets are doing a normal condition. Okay. Okay, for those who are trading US 30 and NASDAQ,